All right, guys. Today we're here with Adrian O'Brien and Kevin Donnell with Midnight Sun. This is their second appearance here on the roundtable. Last time they were here, May 5th of last year, the stock was trading at 61 cents. Today it's trading at $1.08, so a 77% gain since the last time they presented. Adrian, you're in charge. Go ahead and take it away.
Awesome, Matt. Really appreciate it. Thanks to everybody for being here. It's great to be back. We were really keen to do this again. I think it was a huge positive for us doing the roundtable last time. I think we were, Matt, correct me if I'm wrong, were we not the very first company to do this?
I
Certainly
think
one
you
of
were
the first.
you were the first to agree and maybe the second to do it. Yeah.
Yeah, right on. Yeah, I know we were really early on, and huge value for us to be able to show all of you the story at an early phase. And I think the biggest thing to point out was that when we did the very first one, we had not yet put a drill rig on the ground at Dumbwa. We had not yet started drilling. We had a target. We had a great target. We had a great story. But I was really keen to get back here and speak to everybody again and show you what we've done. Led by the other fellow that'll be on the call with me here, Kevin, who was on with us last time. We actually did the second round last time, did a technical presentation, round two, if you will. But we now have a discovery. We've now shown that Dumbwa was real. Not only have we shown that Dumbwa was real, we've shown that it has serious scale. We already have 4 kilometers of strike length to this deposit. It's coming together very, very quickly. And the attack plan we've taken is extremely aggressive. We're drilling, give or take, 10,000 meters a month. We have 5 drill rigs turning. We're going to show the world how big this thing is in short order. So it's super exciting and gives us a chance to come back and show you that we had total conviction. We've taken the right approach. We have a model. The model hangs together. And now I get to show you guys what it looks like. And then, of course, Kevin will fill in the blanks on the technical side. But let me pull up the deck and let's dive in and I'll show you where Dumbwa sits today. Matt, maybe you can let me know when you guys can see this. Make sure I don't start before you can see the graphics and stuff here.
Yeah, there you go.
You're set? All right, let's kick in. I'll walk everyone through. I'm going to do this a little bit thematically, and I'm also going to give you a bit of a recap for anybody that either wasn't on the very first time, or to make sure that everybody really understands the story and what this is all about. I'm going to cover off a few kind of key pieces as well. So understanding that globally, when you look at different copper districts, what we're working on, and of course, this was a big part of our thesis going back to when we picked up the project 12 or 14 years ago. This belt, the Zambian Congo copper belt, the Zambian copper belt, if you will, but specifically the Domes region where we're working could be argued it's the top spot in the world now for copper exploration. It is certainly one of the absolute hottest spots on the planet. We saw that coming. We made that bet a long time ago and we were right. And there's a couple of different reasons for that. But look, I'm going to make it really, really, really simple, really straightforward. These deposits are some of the largest on the planet. They are averaging around 1 billion tons. And within this district, you see 2 different types of deposits. You see sediment-hosted deposits and basement dome-hosted, which Kevin will give you even more detail on. But what we're working on is a basement dome-hosted model. These sit right at surface. The mineralization's right under your feet. These are not at the top of the Andes. These are not 2 kilometers underground. So you're looking at deposits that are at the very highest end of the continuum in terms of size and scale, but they're right at surface. And in a district that is very much a copper-centric nation, this is a complete and total mining nation. And so it's easy to move things forward. You have support of the government, you have proper mining act in place and all the proper themes there that you need in order to have a really robust mining industry. So for that reason, as I'll show you in the graphics I'm going to pull up in a moment, every copper company you can pretty well think of has moved into this district. So when you're a company like us that's looking to build an asset for the purpose of sale, right? Not to build a mine, but to build something that is a target for M&A, you want a nice competitive environment. You want as many different operators there as you can have to create competitive tension. You could not have a more perfect storm for M&A as what I'm going to show you in a moment. So looking at Zambia, just to give everybody a really quick brief on the country, 75% of their export earnings are copper. So this is truly, as I said a moment ago, this is a mining-centric nation. It's a place where billion-ton deposits are nearly the average, and it's a district where if you find a big deposit, you're going to be able to build it. So what you see is, of course, First Quantum and Barrick. I'm going to show you their operations in a moment. Ivanhoe has moved into the district now. They have 8,000 square kilometers of land. No discovery yet. Rio Tinto has moved in. Anglo American is there. Glencore is there. BHP is there. Freeport-McMoRan's sniffing around. Every major player you can think of. And 75% of their export earnings are copper. This is a nation that is a copper producing nation. They embrace it. It's what they are. They have a proper democratically elected government. They have a proper mining act in place. And like the picture in the background of this slide, this is Chingola. That's a mine that's been in production for over 100 years. These are incredible, incredible long life mines, very big deposits, and they really set the stage for a perfect environment to be advancing targets like we are. So moving towards where we're actually working here, this right-hand side of the graphic is the Zambia-Congo copper belt. That's more of the traditional belt that people refer to. But over the last 20 years, what has emerged is this district over here where you see all of these bubbles across the screen. This is the Domes region. And we're talking maybe 300 kilometers east to west by 200 to 300 kilometers north to south. And you have Ivanhoe's Kamoa-Kakula, their flagship operation, of course, inside the DRC, but that's about 1.4 billion tons at almost 3% copper. First Quantum Sentinel Mine, it's 1 billion tons at 0.51. Lumwana, which is a huge part of our story and certainly a big part of Kevin's story, and we'll dig into that in a moment, that's 1.6 billion tons at 0.5. It's an enormous deposit and a huge success story in the belt. We have First Quantum's Kansanshi mine right next door to us. That's 1 billion tons at 0.66. And nestled in the middle of all of those assets is 384 square kilometers owned by Midnight Sun. That is our Solwezi project. That is where Dumbwa is. And we're the only company with a brand new discovery that is getting into the kind of scale and size and grade of these surrounding mines. There has not been a tier one discovery in this belt in 10 years. And looks like we're on track to deliver the next major deposit in Zambia, something that was a hypothesis 2 years ago and is now a reality. So super exciting. But geopolitically, there's some other things going on too that are really important and you know lend a lot of credence to the thesis that we unveiled a couple years back. And the first is the Lobito Corridor. This is the rail line that's being built by the U.S. State Department. They funded this to the tune of $350 million, and it's being built in order to create an access point to these copper deposits. This belt is what everybody wants access to. And so that Lobito Corridor goes out through Angola to a western port to enable the U.S. to get copper back to the U.S. Through there. And then, of course, as a response to that, China has announced a $1.4 billion rail line that connects to the exact same point going east through Tanzania to get this copper out to China. So you have a literal geopolitical tug of war happening over these copper assets and specifically the 4 deposits that sit in this area around where we are, and that includes Midnight Sun's property. So that is an incredible sort of bolstering the story that we've been telling for a very, very long time, and you're hearing a lot of rumblings about it. I think what it's going to bring is going to bring more Chinese majors into the camp. So you're going to have more of a presence for some of those bigger companies, whether it's Zijin or some of the others that are around. CMOC, of course, is already there with Tenke, sits right above us. But what you're also going to see as a result of those rail lines is, you're going to see more access. You see that Trump has recently announced that he may cut off HIV funding to Zambia if he can't get access to critical supply of critical metals. That's referring to these 4 deposits. So when you see that news around access to critical metals in Zambia, critical supplies, he's referring to this. He's referring to these 4 assets in this particular area. So you're going to see pressure between those two trying to get access. That's nothing but a positive for us. That's really, creating even more tension around here, and it's going to bring more groups to the camp. It's really positive. So geologically, I'm going to give you the layman's terms approach, and then Kevin can dig into the real technical meat and potatoes of this thing once he gets into it. But put simply, these basement domes, which are outlined in yellow, are the key to the belt. That's why they call it the Domes region. These are the geological formation. They're the basement rocks. They're the oldest rocks in the belt. And these are really key to dictating where these deposits form. And the deposits in this region form in 2 different places. The predominant number of them are in what they call the lower Rhone, which are the sediments that surround the basement domes, and they're these kind of orangey brown rings of rock you can see here around Solwezi and around the Mombeji Dome. And separately, they actually can form inside the basement dome itself. Now, the basement dome geology is newer. It's really only been understood well for about 15 years. Kevin's a big part of that understanding and sort of unlocking the secret of how that geology formed. But the two biggest deposits in the belt, Kamoa-Kakula and Lumwana in particular, is basement dome hosted. And Lumwana is an identical analog for Dumbwa. I think we understand it well enough now to say that they're not just similar, they're virtually identical. We have the exact same mineralization, same type of deposit in terms of layered lenses stacked, but there's a few big differences. The strike length of Lumwana is significantly shorter than what we see at Dumbwa, and the mineralized horizon itself is much thicker at Dumbwa than what they see at Lumwana. So there's some pretty exciting pieces of this that as we move forward and begin to get a better understanding, they're going to lend themselves very well to the geological thesis. But as I go into this now, keep these key things in mind. If you're going to compare this to Panama, Chile, Argentina, most of that low-hanging fruit has been picked. Those deposits that were closer to surface have typically been found. So they're going to lower grade deposits. They're going to deeper deposits up to 2 kilometers depth now. And most of those deposits are at very high elevation. When you're looking at these sediment hosted and basement dome hosted deposits, basement dome like Dumbwa, these are deposits where the mineralization is right at your feet. They start at surface and you build your tonnage on strike. So in terms of creating an open pit that is economically not just viable, but actually has the ability to impact the global copper deficit, this is one of the only places in the world that can do it. These deposits are big enough, can be in production quickly enough, and at a low enough capex that they can actually have an impact. And that's why every copper company in the world is in this district right now. So this is really a pretty incredible spot to be, and we're pretty lucky to be there. So there's two assets I'm going to show you today. When we went through this last time, we talked mostly about Dumbwa, but we also talked about Kazhiba. And Kazhiba was an asset we were working on. It's a high-grade oxide copper deposit. And our goal is to move that off to a producer, obviously First Quantum in the mix on that, to create source feed for them with something that sits right at surface, that's high grade. And since we spoke last time, we've taken that all the way through to an indicated resource. So pretty good for 12 months of work. We drilled about 350 holes. We produced a resource that we released just a couple of months ago, and it's 2.33 million tons at 1.41% copper. So in terms of tonnage, it's small. That was always the expectation. In terms of grade, it's absolutely incredible. It's very high grade, sits right at surface within 30 meters of surface. And so that's material that can be mined and heap leached very, very easily. And it's a perfect fit for somebody like First Quantum with an SXEW circuit right across the way. But I'm going to digress for 2 seconds and recap a quick story about the fellow that's on the call with me. I think this is really important to understand because Kevin joining our group was a real inflection point as far as bringing the Midnight Sun story together, culminating the geological understanding of what this deposit really was and how to get it to hang together. Kevin has spent most of his career in this belt. He's been working on these deposits for over 25 years and spent a big chunk of that time as the exploration manager for Freeport-McMoRan, I think, if I'm not mistaken, 13 or 15 years. And in that time, he had some really significant discoveries to his credit. He really unlocked the understanding of basement dome geology. He was really critical in the work that took place at Lumwana. And I'm going to recap the Lumwana story for you because this is where things really kick off. If you look at Lumwana going back 20 years ago when Barrick purchased this, and of course, Barrick purchased Lumwana from Equinox for $7.3 billion. It's an astronomical bid, an astronomical amount of money. The backup bid to that was MMG at $5.5 billion. So somebody was going to pay a lot of money for this asset. And at the time, it was about 900 million tons at 0.5. Now, copper was only $1.50 a pound. So you can imagine just how high a price tag that was for this asset, but they had belief in it. Barrick went to work there for about 15 years and just could not get Lumwana to hang together the way they needed. And so about 4 years ago, they brought Kevin into the fold and he took on the task of turning Lumwana into a tier 1 asset. So he built a team and Kevin and his team attacked Lumwana. And in an incredibly short period of time, when you think about the continuum of developing an asset from discovery to an MRE in 24 months. They took Lumwana from 900 million tons to 1.6 billion tons, which gave Barrick 62 years of mine life and almost 9 million tons of contained copper. So Lumwana became not just an incredible asset, it became a tier one asset, a true world-class asset. It gave Barrick the ability to change their name from Barrick Gold to Barrick Mining. And the last time we did this presentation, or I was on the call with you guys, we talked about Lumwana in the framework of being a 900 million ton deposit. So these are the numbers now. Kevin led the team that did that work. And then Kevin actually brought Barrick to the table to look at Dumbwa because of the analog. Kevin identified that Dumbwa had the same potential. He brought Barrick to the table. We spent a lot of time with Barrick. We weren't able to come to a deal that made sense. And I think really at the end of the day, that was to our benefit. We retained 100% of this asset. But what we did get out of that process was the best geologist we could possibly have leading the way, and that's Kevin. Kevin joined our team as our COO about 2 years ago, and Kevin has blown the lid off of Dumbwa. So he did exactly what he did for Lumwana. He has now put together a plan. He's put together a model. He's attacked Dumbwa. We got our discovery on the third hole, which is pretty incredible. And he is now leading the way toward defining the extent of this new major deposit in the copper belt. So I'm going to show you a couple of pieces I didn't have pictures for the last time we chatted. And the first piece is what we call a copper clearing. So one of the characteristics that existed at Lumwana and certainly at Kamoa-Kakula that's really compelling is what they call a copper clearing. And this is an area where there's so much copper in soil that vegetation can't grow. So when you're driving across Dumbwa, you typically see what you're seeing in the background of this image here. Lots of trees, lots of grass, a vegetation-rich environment. When you get to the geochem anomaly that makes up the Dumbwa deposit or signifies it, it looks like this. There is simply no vegetation over top of this, and these copper clearings run for a huge distance at surface. Kevin actually sampled when he visited the property the first time. He sampled right behind where I took this picture, got 3% copper in one sample, and I think 1.8% copper in the other sample. But this is directly in the middle of the area we are drilling as we speak, literally as we speak, literally as I'm presenting this to you. This is where we're drilling. This is an area about 4 kilometers into the system from a north-south perspective, and really indicative of something very large going on. And where that sits is in this big anomaly. This is one of the highest grade and largest soil anomalies on record in Zambia. It's based on multiple generations of geochem testing. There's tens of thousands of samples that went into this, but essentially this is a 20-kilometer anomaly, which has a range of anywhere from 500 ppm up to 0.73, so 7,300 ppm copper at surface and soil, preventing vegetation from growing, and really the first major sign of a big system. And so you'll see areas in the graphics I'm about to show you where you have a concentration that ranges from, call it 1,000 to 2,500 ppm, but there's a coincidence between the geochem and the mineralization at depth that Kevin's identified perfectly. It allows them to drill this thing based on the geochem and hit the deposit consistently, and they can really get the model to hang together. So Kevin's approach involved going in, running an IP survey to start. This was dipole IP. This is the 20-kilometer anomaly here, and we decided to start with the southern 12 kilometers. It made sense to break this into 2 pieces simply because 20 kilometers is such an enormous bite to take out of something right off the bat. So we decided, let's do the southern half first, run dipole IP. It's not going to be a silver bullet, but it's the last piece of the data set that we didn't have that would allow us to push this thing forward. So we ran the dipole IP, getting high, looking for chargeability and resistivity, getting the results they were looking for. And with that, Kevin developed a really systematical, methodical approach in terms of how they wanted to drill this. And the decision was made that this would be a very tight grid right from day one, and that we would drill this systematically on strike. And hole number 3 led to our discovery. Now I'm going to zoom in on this slightly. What you're looking at here is a very early iteration of the model. I'm going to show you a model in a few slides that's much more probably accurate and gets us to the kind of the more modern interpretation of the deposit. But this was our first real shot at what it looked like. And hole number 7 was our discovery hole, if you will, 40 meters of 0.51. And important to understand, when you're looking at these intercepts, These are mineralized lenses that sit right at surface and run from surface to about 200 meters depth. 3 stacked lenses. There's an upper, a middle, and a lower. And you're looking at intercepts that aren't going to be like a porphyry where you're getting 200 meters of thickness, but 2 kilometers underground. You're going to get 10, 20, 30-meter intercepts, maybe up to 40 or 50 meters, starting at surface. And in most cases, you're going to see multiple intervals in each hole. That's indicative of cutting through those layers of mineralization. But what that means is a large system on strike that's right at surface and has a very low strip ratio. That's why these are economically so fantastic and why we're working on it that way. So what you see in the middle here, this squiggly line represents a shear zone. So this is looking, if you cut the southern end off the deposit and you're looking into it going north, that's what you see here. This would be the upper lens, middle lens, lower lens. Again, I'm going to show you a more updated version of this, but this shear zone was the delivery mechanism for these fluids. Okay, these deposits are not formed by a chemical trap. This would have come into the basement dome. There would have been deformation in the rocks with a C1 schist that mixed with the copper fluids, and these deposits are formed by strain. That's how Lawana was formed. That's how Dumbwa was formed. And for that, we ended up with a really clear zonation. And what you see is 2 different copper minerals predominantly. We see a lot of bornite and we see a lot of chalcopyrite. But what you find is that the bornite tends to be nearest the center of that system. So the heart of the system is where you see more bornite. And then as you move to the east and west extents, away from that central portion, you get a pretty clear zonation where you get more massive chalcopyrite, which then moves to disseminated chalcopyrite, more disseminated chalcopyrite. And as you move to the furthest extent east, you hit a pyrite shell, which essentially tells you you've hit the edge of the system. So, at the southern end of the system, we're looking at about a 300-meter width. You can see that clear zonation. To the west, there's a more abrupt cutoff that we have yet to understand. But what you see is a very clear delineation and allows these guys to stay on the system as they advance, whether or not we have assays. The mineralization is extremely visual. It's easy to see. The bornite being that really beautiful kind of purple luster to it. And then the massive chalcopyrite, of course, stands out like a sore thumb. Now, our approach to drilling, I mentioned a couple of moments ago, is not what you typically see from a major. Or from a junior, sorry. It's very methodical. And the approach that Kevin outlined is it's winning us a lot of points with funds. As I'm out marketing with institutions, they are consistently blown away by this, as are any of the majors that we've talked to. This is kind of an overall look at the 12-kilometer section that we're currently drilling. Now, keeping in mind that this is 20 kilometers long. So this is just the southern half of Dumbwa. But the approach that Kevin outlined is this. We're drilling at 50-meter hole spacing east to west across the entire system and 100 to 200-meter line spacing south to north up the entire thing. That is a density of drilling that you almost never see from a junior. Typically, the approach is, let's jump out half a kilometer or a kilometer and give the indication that this might be 2 or 3 or 4 kilometers long. It's ultra promotional. It's a big arm wave, and we didn't go that route. We went the opposite. We went with an ultra methodical approach that allows us to build the amount of density we need for an inferred resource on the very first pass. It creates a data set that's completely bulletproof that no major can argue with. So when it comes time for M&A and we allow them in our data room and they look at what we've done, they're going to be blown away and they can't argue with the model that we've laid out and our thesis for the mineralization continuing to the north, or something else I'll show you in a moment, which is a western flank that's hypothetical as well. So this is a really incredible approach. It's more methodical. It's not promotional. What it is concise and accurate and creates an incredible data set to go from and a perfect geological understanding of what this is as we advance. So you'll notice here, these are some of the drill results now. We're getting 22 meters of 1%, 15 meters of 0.98, 25 meters of 0.89. I mean, on and on and on. The grade's getting better. The thicknesses are getting better. And I think it's important to understand here that this is not necessarily going to be one continuous 20-kilometer open pit or something like that. You're going to have higher grade zones and lower grade zones. You're going to have narrower sections and wider sections. For example, up here, we get an area where it blows out and it's getting up to 1.2 kilometers width. Up here, you're seeing up to 2.6 kilometers width. Down at the bottom where we've just completed drilling 4 kilometers, we've got about a 300-meter width. So you're going to get some variation, and that's going to adjust our overall tonnage. There's areas where we can build a lot more tonnage. There's going to be areas where it's lower grade, and you'll end up with different sections of this thing as we go. But this is the beauty of where we're at in this process. This is what I would call both a resource delineation and an exploration program simultaneously. Kevin is going out and defining this thing, learning about it, and figuring it out as we go with an incredible success rate. Our hit rate now is well over 90%, if not closer to 100%. They know how to stay on it. They know how to hit it, and we're just methodically drilling it off line by line by line by line by line, all the way from the south to the north. And I'll give you a bit of an idea of time frame. They're currently drilling nearly 10,000 meters a month. They're drilling with 5 drill rigs. That's varying a little bit as we move the drill rigs up. At certain points, we have to take 1 or 2 off, move them around a different way. So I think currently we have 3 drill rigs running. We have had 5 running most of the way along. Our drill cost here is only $160 a meter. Okay, so it's very, very low, mostly due to the low labor cost in Zambia. But we're advancing this incredibly quickly. And so we're looking at reaching this 12-kilometer mark by about Q3. So let's call it the end of July or early August. At that point, we're going to have 12 kilometers of strike. We're going to understand how big Dumbwa actually is. And that is incredible. We already have an idea of what we're getting to in terms of tonnage in the southern section. And we're on target for our goal, which is 1 billion to 1.5 billion tons as a starting point within this first 12 kilometers. And we think the grade is going to be consistent with every other big deposit in the belt. That puts us at about a 0.5%. It could be 0.4, it could be 0.6. But we've got a lot of drilling to go before we define that accurately. But what we know is that the system is real, we're underway, and we're advancing it very quickly. So I'm going to show you a couple of slides that are directly out of the presentation Kevin often gives. This is really to give you an idea of the distribution of the mineralization. The green dots on the left are the 4 kilometers we've currently drilled off. The next section here to the north is where we're drilling currently, where you see all those red dots. And this section up to the north here is where we're going to drill by the end of July or August. That'll take us through to Q3, and that's that first 12 kilometers. The first 4 kilometers, what you see in this next graphic over, this is the bornite. So this is the highest copper by weight mineral that we're going to find out here. It's very, very high grade. And this stuff will range anywhere from 0.5% up. So you could see, this where you can get some splashy intercepts that are over 1%. It's going to be predominantly bornite. We've taken all those sections and we brought them to surface so you can see very clearly. Down at the south end, this is that 2,500 ppm plus geochem anomaly, as is this section up here. And you can see the density of that bornite. It's incredible. Adding the chalcopyrite, which are the yellow dots, we've brought that in here, and look at the density of mineralization. Like it's incredible, and it's purely coincident, almost on a one-to-one basis with the geochem anomaly, which is Kevin's silver bullet here for guiding this drill off. So going incredibly, incredibly well. And this I know is Kevin's favorite slide, or one of them. This is a cross section. So now we're on the eastern side of the deposit, looking back through the deposit to the west. And I know in the last call we did, this was one of the things that everybody wanted to see. And we explained that we needed to do the drilling to have a really clear cross section to show it. We don't want to show historic data. We want to show new data. And here it is. The blue is bornite, the red dots at surface. We are clearly getting almost an exact, consistent, right at surface mineralization, running to about 200 meters depth. We have drilled deeper. We've drilled at 344 meters depth, and we've hit mineralization. But realistically, when you're looking at pit constraints, you're looking at the geometry of this thing, 200 meters is a great depth to go with. It gives us a big deposit on any scale. And this is just the first 4 kilometers out of 20. So you can kind of see where we're going. It's beautiful, it's consistent, and it's coming together. And this, I'm going to let Kevin dig into this further once he hops on here to answer questions. But this is one of Kevin's original sections from Lumwana. And I mentioned the consistency with this. This is identical. Okay, these were formed the same way. They were formed under strain. So as these fluids were forced around these gray gneiss boudins, the strain forced that copper to come out and settle. And so you have an area here at Lumwana that's 40 to 60 meters thick with about 20 meters of overburden, give or take. Again, I'll let Kevin speak to that with more precise answers in a moment. But When you're looking at this on a comparative basis to Dumbwa, here's the biggest difference. Lumwana is approximately 4 kilometers long. It is wider than what we see in the first part of Dumbwa, but it's about 4 kilometers long. Dumbwa is 20. So you let that sink in for a minute. We're talking 4 to 5 times the strike length. And from a mineralization perspective, this is Dumbwa. The mineralization starts at surface. This is our first fence line model that we built up. This is 200 meters thick. 3 distinct lenses, 200 meters of thickness versus the initial 40 to 60 at Lumwana. This is thicker. This has an exceptional strike length, 20 kilometers, nearly minimum 3-4 times the size of Lumwana. And what we'll see now is how it goes from an east-west perspective and how wide this gets. But this deposit's big, it's real, and now we're defining the extents on strike and from a width perspective to get us to the finish line. So it's a pretty exciting phase to be at now. There's going to be twists and turns. We're going to find, as I mentioned, narrower sections, wider sections, lower grade, higher grade. We're into an area now that we think will deliver some of the highest grade intercepts, but it's super, super exciting. The other piece is that we just had a group named called TECT. TECT is a really well-known structural engineering firm. We had them to site. What they did was they analyzed or audited, maybe is a better term, all of our processes, our cutting, our logging of core, our QA/QC protocols. That's quality control. Our model. Does our model look like Lumwana? Does what we're working on hold together? And I think they were simply blown away by the work Kevin had done and the way that the team had pulled all of those pieces together. The one piece that they were convinced of, though, that was new to us, is that they don't believe that Dumbwa is necessarily just one eastern limb. They actually think that there's a second western limb and that this is part of a big synform or a syncline. And so we're in the midst now of testing that by way of geochem and IP. And it could just be that we're only on one half of Dumbwa and that we have a whole other aspect of this to go and work on. So it's in the hypothetical category right now, but we're doing the initial steps to get that to the finish line and decide whether that's something we want to go and drill. But it keeps adding to the upside, and we're still only on that first half of Dumbwa with a target of 1 to 1.5 billion tons at a grade similar to those around us. So that's where Dumbwa sits today. Let me quickly show you Kazhiba and what we've done at Kazhiba, and then we can get Kevin in on the call here, and you guys can dive into some technical questions. So Kazhiba, of course, is a very flat area. This is the southeastern corner of our property, or sorry, the northwestern corner of our property. Dumbwa is southeastern. And this sits right across from First Quantum's Kansanshi mine. So when we first started the process at Kazhiba, we knew we were close to Kansanshi. We knew they had a need for source feed and that they have a smelter on site which produces about 1.5 million tons of sulfuric acid a year, which they use oxide copper to neutralize. So we started this process thinking we would create a perfect source feed for First Quantum and working under kind of a loose technical alliance with them. And what we ended up doing was putting a pretty aggressive plan in place. We drilled about 300 holes and we defined a 2.33 million ton resource. We put out an MRE. It's an indicated resource. So the hole spacing was very tight across this. And this is what Kazhiba looks like. This is high grade malachite. It's almost 100% acid soluble material sitting in saprolitic soil. It starts at surface, runs to a maximum depth of 30 meters. So it's extremely shallow. This would be excavator mining, meaning somebody would put a simple pit constraint around this, scoop it up with an excavator, take it to a heap leach, and process it. No crushing, nothing else needed. It's as straightforward as it gets. So with the MRE in hand, we have kicked open the door on those negotiations. We have a few groups at the table. Obviously, there's a confidential nature to those discussions, so there's only so much we can say. But we have opened up all of those discussions. And we're looking to monetize this as quickly as possible. And when I say monetize it, it could take a couple of different forms. It could be an outright sale of this material to an end user. It could be something like a royalty, like an NPI, call it like almost a 30% NPI or something that would lead to a year-over-year payment. But one way or another, we're looking to capture somewhere in the range of $30 million or $30 million, 30% of the cash flow from this, which would equate to probably somewhere in excess of $50 to $70 million, maybe up to 125 or 150 million. This is about 76 million pounds of copper. So it has a serious value to it, particularly given the high grade nature and how close to surface it is. So we've now got that asset to the finish line. We did that in extraordinarily quick fashion. We did that in about 12 months. So we didn't mess around. We told you what we were going to deliver, and we delivered that at Kazhiba. And now we've delivered a discovery at Dumbwa, and we're advancing that as well. So we've done a lot in the last 18 months. We have Dumbwa, which is now Zambia's next major deposit. We're in the midst of defining the extents of that deposit, but we know it's real. We've taken our market cap from, as Matt said at the beginning, last time we spoke was around 60 million to a peak this past year of 376 million. With the markets the way they are currently, given geopolitical environments, things have softened up a little bit. And we're actually sitting below our financing price now at about $1.08 or $1.10 today. But we did raise $30 million at $1.35. And you may remember the last time we were on here, I did say I didn't intend to raise any more money until we were, well over a dollar. And we held true to that. We didn't raise anything until we were actually at $1.50, which was a 7 times lift from the initial financing that Doug took part in, and of course that we did back in May 2024. So we've come a long way. We've delivered the things we set out to do, but this is actually the most exciting phase of the story now, where Kevin's putting the size and scale to Dumbwa, and we're going to show the world just how big this thing actually is, delivering a brand new deposit into probably the best environment for M&A that I've ever seen. And all of that has really come around. We've got some coverage now too. We did bring in some new institutional holders. The financing we did was entirely institutional, led by 3 or 4 big resource funds. And we now have Haywood and SCP covering us as well. So there's a good summary on the Midnight Sun story to date. And I think we should throw it open and allow you guys to ask any questions you want. There's lots to go over there.
Yeah, Kevin is here to answer questions as well. So Lawrence, your hand's up first. Go ahead.
Okay. Great presentation, Adrian. Exciting project. You've certainly accomplished a lot in the last year, as you said. Just to look at it from a high level for a moment before getting
Sure.
into technical details.
Yeah.
Assuming you're able to achieve your objective, and it looks like you're on track to do that, of a billion or 1.5 billion tons, can you give us an indication of what the valuation would look like? You mentioned Lumwana and the Equinox story. Might that be a comparable or something to that this could look like if you achieve
Yeah.
that objective?
It's a great question, Lawrence, and I think it's one of the most, probably one of the most common ones I get, particularly when I'm dealing with funds. It's really tough in this area to come up with a comp, only because it's been 10 years since something like this was found, and copper was at such a low price the last time a transaction took place. That makes it very difficult now to put a comp to it. But what I would say is that from an NPV perspective, these deposits are at the very largest end of the continuum. So they have an incredible amount of value, particularly given the shallow nature of them. But Lumwana is a great comp. You have to assume that Lumwana did have mine infrastructure in place. It wasn't just a deposit, but when you were looking at a 900 million ton deposit at 0.5, copper $1.50 a pound, and companies, more than one company, willing to pay somewhere between 5 and 8 billion for it, gives you an idea of what a deposit would be worth. And I guess I throw it back and say, hey, if there's 1 billion tons here, let's just be conservative, not wave our arms and say it's 1 billion tons at 0.5 and copper's at $5 a pound. What kind of valuation does that get? I think the competitive nature of the environment in this area right now is really going to dictate where that price can go. But I think the value is almost unprecedented as of right now. Really incredible. But I think Lumwana is still the best comp.
And that was in 2011?
Yeah, somewhere around there, 2011, 2012, somewhere around that point.
Okay, thank you.
Okay.
Matt, you can pick and choose who goes when, I think here. There's lots of questions.
Yeah, Nick is up.
Hi, thank you for the presentation. Just a question about cash. I see from your deck you have about 30 million in cash. How long do you expect that to last you guys for?
Yes, we actually have a little more than that. I put it here as greater than 31. We're probably at
Mhm.
about 30, 33 to 35, somewhere in that range. We do have a fair number of warrants that come down from time to time, so we do get some cash coming in from that. But the budget right now to get to the end of that 12-kilometer stretch, the overall budget's
Mhm.
about 20 million. So that's going to leave us with about 15 million in the bank at the end of that process. So still well funded. And assuming we can get Kazhiba sold, which we are pretty confident we can, that's going to deliver, a significant amount of cash that should carry this all the way along without any further dilution. And that was entirely the plan, was let's come up with a way to deliver this asset without diluting Midnight Sun any further. And turning Kazhiba into cash seemed like a natural pathway.
Gotcha. So the plan is not to raise any, not any plans to raise any funds anytime soon.
You got it. Yeah, we should
Gotcha.
be done on that front. We think Kazhiba will take care of that.
Okay, and so over the next, say, 6 to 12 months, how do you see things going, and how should investors look at it?
I think you're looking for some pretty specific catalysts. I think number one, obviously, Kazhiba is going to be a big catalyst. The day that we move that material off for cash, that gives us a big injection of capital. It's going to be an exciting move, and the follow through of something we've been planning and working on for a long time. So I think that's a big catalyst. Other than that, the guys are drilling at an incredible rate. We've probably the one struggle we've had, and I think it's fair to say, is that the labs have had trouble keeping up with the pace that we're moving. At 10,000 meters a month, it means we're delivering about 1,500 samples to the lab per week. And SGS, who we work with, had a pretty small facility with a single prep lab, and that was a struggle. So we had some QA/QC issues. That's related to our own stringent QA/QC protocols. At the end of the day, we don't want poor results. We want results that are dead accurate that we can depend on. So putting the QA/QC protocols in that ultra stringent category just means we have a better, more reliable data set, and that's an important thing to us. So we've had some delays on that basis. We've got about 29 holes back. We should be on the cusp of getting more results here shortly. And that lab has actually moved into a new facility where they have multiple prep rooms as opposed to just one. So that's going to speed the process up as well. So I think the big catalyst here is drilling. It's drilling and drill results. This is now a process of defining the shape, the structure, and the size and scale of a brand new significant deposit in Zambia. So that's really going to be the big catalyst going forward, is all those drill results as we move along.
Great, thank you.
You bet.
Thanks, Nick. Lau, you're up.
Hi, thanks for the presentation. I have just one question. It's one that I've been thinking a lot about, and actually
Sure.
that was one of the reasons why we ended up taking profits on this one back in October, I think. So when we last spoke, the whole Kazhiba story was really built around First Quantum specifically, right?
Yeah.
So your oxide ore going next door to Kanshani and all that stuff. We
Yes.
noticed that, and then I noticed that when your mineral resource estimate came out in January, the language kind of shifted to discussions with counterparties rather than specifically calling out First Quantum. And then on this call as well, you said that a few groups at the table, a few different ways this could be structured and things like that.
Sure.
So I'm just wondering, is First Quantum still the primary counterparty here, or has that relationship changed? And also, I'm asking because you've also framed Kazhiba now as the key to funding Dumbwa without further dilution. So
So
yes,
what I
that
would
I'm
say is,
wondering.
yeah, no problem. If you go back, Lau, to the original stuff, that actually nothing's changed at all. The only difference is that there's more groups that have entered the story. And what I would say is that the goal with Kazhiba has always been a source of funding that we could use towards Dumbwa to define it. And, I would simply put that to Kazhiba has a lot of value, and Kazhiba is a significant resource, particularly as something that's so near surface and high grade. But on a comparative basis, Kazhiba is tiny compared to Dumbwa. Dumbwa has an incredible amount of value, and it's an incredibly big deposit. So when we've looked at Kazhiba, we've always viewed Kazhiba as funding to move Dumbwa forward. Now, the plan at the outset was always First Quantum. Kansanshi is next door. They need material for neutralizing acid from their smelter and source feed for their stockpile. Their stockpile is, well defined in their technical reports. But Our job as Midnight Sun is to deliver the best deal we can on that oxide resource. We want to turn it into cash. We want to turn it as much cash as possible. And it is of value to more than just First Quantum. So if other groups are in the mix, and again, there is a highly confidential nature to those discussions, so I can't dig into much deeper detail other than to say they're not the only group in the mix. We're welcoming any groups to enter that conversation because that is how we derive the best deal for our shareholders. And we have to do that. So that's the reason for the language change and why we're moving forward on that basis is we're not going to limit ourselves to one party. If there's other groups there that want to do a better deal and it means a better return, then that's the direction we're going.
Thanks, Adrian. One more question. I just realized I wanted to ask something else. Because that was sort of the another side of the reason why we decided to take profits back in October.
Sure.
So back in October, you did financing, right? And you upsized
Yes.
it twice. And that have sort of happened in quick succession. I think
Yes.
it went from 10 million to 30 million something.
Yes.
There was also the life exemption involved.
Yes.
Yeah. So that created like this kind of like immediate overhang, and there was no lockup period, obviously. So what drove the decision to upsize that financing so aggressively, and the life exemption structure that was a deliberate choice, I understand as well.
Sure.
Right?
Yeah, there's a couple pieces. So number one, again, it goes back to something I know we've discussed in the past. I've certainly talked to Matt and Doug about this. We have an ethos as a group. I firmly believe, and I know my team believes, that one of the biggest problems that faces juniors is undercapitalization. For a lot of juniors, it's suicide. They get caught in this trap of raising small amount of money, doing a bit of work, running out of money, doing it again. And it's a bit of a spiral, and it's not a great way to move forward. If you have a big project, you have conviction, you have an opportunity, you should lock in the requisite capital it takes to get it to at least the first major milestone, which for us was getting Dumbwa to that 12-kilometer mark, and that meant we needed $10 or $20 million minimum. So we went out to raise 10 million. I'll give you the story really quickly on how that unfolded. When we launched the financing, we launched at 10 million, again, 7 times lift to our previous financing. So previous one was 22 cents. We launched it at $1.35. I hopped on a plane to Munich. By the time I got off the plane, the book was 25.5 million. I went out to dinner, came back, the book was 65.5 million. 65 was beyond what we needed. But what we did was we scaled it back to 57%. We locked in 30.5 million with the green shoe provision, which gave us enough money to drill Dumbwa in total, get that entire 12-kilometer stretch drilled off, and not have to pause, which to us, the speed of execution was critical. We wanted to be able to do that. So that's exactly what we did. The reason for the life exemption was twofold. We wanted to be able to get and capture funds that are in other jurisdictions. We also knew that we were executing the financing in Q3, which if you're showing a hold period on a financing, that precludes a lot of funds that we wanted to involve from participating. So by putting a life financing together, we were able to get every single fund we wanted, and the financing itself was predominantly institutional. So there's 15 funds in there. Lead orders were 1832, Libra, and 9 Point, all really fantastic shareholders. And what we did is we moved this thing from being, very small, maybe 12 or 14% institutional holdings to almost 40%. So that's the reason why we went with the life financing, was to capture as much of those institutional holders as we could. And really, I think that the move to being an institutional story hugely validates what we've been doing and gives us a really good backing, not to mention some very, very loyal shareholders that are going to be there through the process as we start to guide this towards hopefully an M&A transaction over the next while.
Thanks.
Yeah, you bet.
Okay, great. Thanks, Lau. Graham, go ahead.
Could you tell me a little bit about Cobalt and what would the company look like if they decide to convert completely and own 75% of the company?
Yeah, Cobalt has zero interest or any deal with us. So Cobalt had an earn-in agreement. When I first joined the group 3 years ago, shortly after I joined, they did an earn-in agreement with Cobalt. The terms of which I've never been a giant fan of, to be perfectly blunt with you. I think 75% of your asset for $15 million was not ideal. I think it was done out of necessity with a lack of capital in hand. Lucky for us, Cobalt did not advance the earn-in. They didn't set foot on the ground. They did no work on the project. They became very focused on Mingomba, which is their asset about 200 kilometers east. Used to be called Lumbambe, but they've gone in and applied a new model to that. And it put us in a position where we were able to exit the earn-in. And so last year, the earn-in was terminated, and we ended up with 100% of Dumbwa. So we own our project 100% with no royalties, no encumbrances, and this is 100% of Midnight Sun story.
Okay, good. Adrian Day, please.
Yeah, sorry. Just a couple of questions, if I may. Just to be
Sure, yeah, of
clear,
course.
on Kazhiba, obviously you're going to say you're going to do the best deal for shareholders that you get,
sure.
obviously.
Yeah.
But just so that I understand, is just completely selling it one of the options?
Yeah.
And then another option might be having a net profits or something like that.
You got it. Yeah, you just hit the nail right on the head, Adrian.
And do you prefer one or the other?
I personally, I would prefer a straight cash sale. I'd rather see that oxide material sold in lump sum and we have a large amount of cash in hand. I think that's the most powerful position for us to be in.
Okay. And then the second question would be on, I know you can't give me details, but are any of the majors, how would you characterize any conversations, any talks, any, anything that the major companies are doing with regard to Dumbwa?
So what I can say on it, obviously, any groups we're talking to are under NDA, which precludes us from even talking about the NDA itself.
Sure.
What I can say is we've set up a data room. We are welcoming key groups into the data room that come along, and we're making sure that any groups that need to be up the curve are up the curve from day one. So, recognizing that in this camp and in this area, we're essentially surrounded by every major player. I'm going to bring up a map for 2 seconds because I think it really sets the stage for what you're asking. When you look at the camp today, let's use this one here. So historically, of course, we've got Barrick here, Barrick Mining now with their 1.6 billion ton Lumbwa deposit. And when we're looking at this, having Barrick next door, obviously they become a natural scenario as far as a potential transaction, as does First Quantum, just 6 kilometers away. But if we go off the map, way out to the west, Ivanhoe has picked up 8,000 square kilometers of land that adjoin Angola and their West Forelands project. That's all grassroots property. They're looking for a discovery. They do not have one. Rio Tinto has a large land package as well. I mean, 8,000 square kilometers of land is an astronomically big land package. But as I mentioned earlier, you have BHP, you have Rio Tinto, you have Anglo American, all these groups sniffing around, looking for assets, looking for acquisitions, and looking for a new discovery, and they don't have it yet. So if a company like ourselves, and keeping in mind that we're the only junior in the heart of this belt and the only group with a brand new discovery that we're advancing, if we can serve up a brand new discovery on a silver platter, it is literally a perfect storm for M&A. And when you add in that Chinese tie-in with the new rail extension and the new Chinese groups or the current, existing large-scale copper producers out of China that are undoubtedly going to enter the Zambian fray, and I'm confident that most of those companies have a mandate to acquire Zambian assets. It's certainly the hottest spot. That's going to create such an incredible opportunity for M&A. And I think any groups in the mix, that'll create a lot of competitive tension, which should bode well for us. But our job is to ensure we drive the project forward as quickly as possible. And then if there is an opportunity to engage those groups, we do it right away.
Okay. But you're not actually in any, what we call serious talks at the moment.
No, and that's a tricky one. I mean, obviously we can't say whether we are or aren't. So, I think it's safe to say we've got the data room. We're welcoming groups in. We're not in any rush to sell it, Adrian. I think what I would say is this: we're going to drill Dumbwa off before we engage any moves towards moving it off, because that's what's going to create the value. So we're not going early. Let's put it that way.
Okay. Just very last quick comment, if I may.
Yeah, sure.
It's not unusual for inside ownership on Bloomberg to be totally inaccurate, but just so you know, yours is completely inaccurate.
Okay.
But someone from the company might need to reach out to them. When I talk to them, they won't do anything.
Okay, that's a good update. I appreciate that. Yeah, we'll touch base with
because it doesn't mention inside ownership at all.
Okay.
Yeah. Okay.
Yeah, that's good. That's a great heads up. I appreciate it.
Okay. Thank you.
Thanks, Adrian. Thank you. Gary, you're next.
Adrian, that was a great presentation. I really appreciate your energy, and there's so much exciting news there to hear. I wasn't a part of the first call, so that was really exciting. Yeah. So I guess the dilution pressure is coming from the various capital raises that have been done over the last couple of years. Are there additional catalysts beyond the drilling that you've already talked about that would start to reverse that pressure on a per share value basis?
Yeah, I think I think a couple things there actually, Gary. I really appreciate that one. I think there's a couple pieces to unpack. The first being around that initial financing. I think, surely there's some turnover related to those earlier warrants, but I mean, we see those warrants being exercised when they're being exercised, and there's not a lot of 33-cent warrants being exercised at this point. So we don't think there's too much overhang on that basis. The life financing was a very select group of participants. So what I would say is, though there's a collection of retail investors in there as well, we brought in sophisticated groups that really believe in the long-term picture for what we're doing at Dumbwa. And so I don't think there's a ton of overhang there either. But I think the overhang we are seeing is related, more to the overall markets, and just simply that, there's kind of a percentage of this story that's retail. It's been there for a long time. Company's been around for about 12 years. We kicked this plan in about 3 years ago. So this has been a real fast track attack plan as far as getting Dumbwa to the finish line. And how quickly Kevin's advanced this is absolutely incredible from our standpoint. And so, I think you're just getting kind of a natural turnover combined with this geopolitical environment. What's going on overseas right now has just led to some sell-off on that basis. But, I think the lack of news flow from assays has probably just kind of kept us a bit stale as well. So once we break through that and we start delivering assays on a more consistent basis, I think we're going to build a lot of momentum really, really quickly.
So drilling is the primary catalyst.
Drilling is a primary catalyst. Yeah, the sale of material from Kazhiba is going to be a big catalyst once we pull something off there. And then I think it's just all about drilling. Really, it's drilling and drill results and getting to those big milestones, the 6-kilometer mark, the 8-kilometer mark, the 12-kilometer mark. By the time we get to 12 kilometers, we're going to have a pretty good handle on how big this thing is, and how close or how much we've exceeded our target by, whatever that ends up being. But that's going to be a really key point. And keeping in mind, that's only July or August. It's not very far away.
Yeah. All right. I appreciate it, Adrian. And thanks again. And congratulations.
Appreciate it, Gary. Thank you.
Thanks, Gary. When do you think the Kazhiba news, what investors ought to look for that?
It's really tough to say. Again, it kind of goes back to that thing of being under CAs and NDAs and not really being able to say a lot about the negotiations. But look, it's imminent, and it's something we're working on getting done as quickly as possible. Obviously, the quicker we can get to a deal on Kazhiba, the better. We want to capture the copper price here, but we don't think the copper price is going down anytime soon. We think it's going the opposite direction, so we're not worried about that. But cash in hand is a powerful thing, and I think it would have a really strong signal to the market. So we want to get a deal done and put that cash in the bank so that we can just keep rolling along, and it's an important catalyst to knock out.
And did I get that right, that you estimated the value of that at somewhere between 75 and 150 million?
Yeah, I think just looking at the value of Kazhiba on the basis of an NPV, like you 76 million pounds of copper right now at $5 a pound, you're looking at least $350 million a pound. So I mean, you can kind of look at it on that basis. What we've gone into, Adrian really hit the nail on the head looking at the two ways we could sell this, and that is, if you're going to sell Kazhiba, do you sell it lump sum? Do you sell it for cash? Do you sell the oxides in one shot and take one big payment for it? Do you do it as a year-over-year thing? The reality is it's going to be mined very quickly. Like anybody that mines that thing is probably going to do it in 6 or 9 months and stockpile the material. So then it becomes a case of how long does it take them to process it? And the other side of that, of course, is do you take something that's like a royalty on production, almost like an NPI, where are you better to take it as a lump sum? I have my own preferences. Certainly the board is going to have their say in how that's done. They're going to be the ones calling shots. And those negotiations are, up to the end user as far as how they want to approach it as well. But I think just from a personal perspective, that a lump sum cash payment for the oxides is probably the best way to go.
Okay,
I
sorry.
think that would have the biggest possible impact.
Okay, sorry for interrupting. Byron, you're up.
Yeah.
Yes, hey, this was a really strong presentation. I enjoyed it greatly. I love your geology. I love your photographs, the mineralogy that you got there.
Awesome, Aaron.
And
Thanks.
you guys have made terrific progress, and I'm totally impressed. And I'm going to probably buy some shares when I get off the call here. If the
Nice.
market's still open.
That's excellent. Thank you.
Yeah. And here's a question. You're drilling. You're drilling away. This is great. You got super low drill costs. That's great. Considering where you are you affected by issues of diesel fuel and price spikes that are going on in the whole rest of the world right now? I mean, are you going to, are there issues with the logistics of just supporting the program, like for the next couple of months or however long it takes for things to unfold?
Yeah, it's a really good question. Kevin, are you on there? Why don't you hop in and answer that? That's more delving into your technical side. So maybe you can lend some opinion on where that sits.
Yeah, I can. In terms of the drill contractors, they're tied into a per meter rate, pretty much irrespective of the diesel price. So we won't be seeing any contractual rises in drill meter rates or per meter rates based on the price of fuel. In terms of fuel availability, yes, Zambia is already starting to experience shortages. It's going to be an issue everywhere in the world, not just for us. So I think there's a chance of drilling delays because we just physically cannot get our hands on diesel. However, we have like a week or two's warning. I sent out a flag to the drillers and to our geological team to expect diesel shortages and to stock up, at least keep us going for another 3 or 4 weeks, which kind of maxes out our storage capability. So I don't think in terms of price rises in fuel, it's going to hurt our drilling contractor long before it hurts us. In terms of just sheer diesel availability, we might experience some delays, but it depends. But yes, it's definitely a concern. It's a concern we're on top of. It's a concern we're thinking about. And ultimately, it might be something that we just can't avoid, if that answers your question.
That does. Yeah. Thanks. No, I think this is a great program. You've really moved it along, and you're building a really good looking project here. So thank you.
Thanks, Byron. Really appreciate that.
Thanks, Byron. Adrian, you have another question. Go ahead.
Yeah. Thanks. Just quickly, and I'll add that this was a great presentation. Very good. If you sell Kazhiba this year, what would be your tax rate on that if it's sold for a lump sum?
Oh, that's a really good question. Not sure. I know our corporate tax rate here in Zambia is about 22%. So I'm not sure how that gets taxed exactly. I'd probably have to pull our CFO in on that one. But I'm assuming, something in the range of our tax rate is probably where it would sit.
Right, but you're a Canadian incorporated company, right?
Correct.
So you would have Canadian tax to pay as well.
Yeah. I'd have to pull them in on it. And that's one of the reasons I think when you look at the different approaches to how to monetize Kazhiba, moving into that conversation around whether the best most advantageous way forward is an NPI versus a lump sum sale. That's really comes down to tax efficiency at the end of the day. Those are the real considerations for why you would go one way or the other. And certainly one of the things we've been exploring.
Okay, great. Thanks.
Awesome. Thanks, Adrian.
Okay, Dominic Frisby, you're up.
Sorry, I was just trying to Google what corporate capital gains tax is in Zambia, but I didn't have time to get an answer. I know you said you've got more than 30. It's a hard number to answer, but when you're drilling constantly, but just roughly, what is your burn rate? I'm just trying to clarify how long that 30 million or so in cash is going to last you.
Yeah. So, I mean, we know our budget to the end of this 12-kilometer section is about 20 million. Some of that we've already spent, but maybe Kevin, you can add an even more accurate number to the burn around our exploration cost.
The 20 million figures pretty spot on. We expect to go through about $20 million to get to the full 12Ks. What we're doing
20 million by the end of this year?
By the end of July.
Sometime during Q3, I think we'll be done with the drilling. When we hit the mineralized zone is very heavily altered. It's quite soft. It's schist, and it's kyanite schist at that. And the drilling company is perfectly capable of producing between 50 and 75 meters a shift. So we're knocking out a hole every 2 to 3 days. So our scheduled end of drilling to go through the full 12Ks is roughly around about the middle of August. Now, I can't take into account things like, fuel availability disruptions. There's always the black swan events. I can't account for those, but at the moment we're scheduling to finish our drilling sometime around about the middle of August. And we expect to burn through about somewhere between 18 and 20 million to get us to that stage, which leaves us about 15 million banked. We've got geomet work to do. We're about to start that in the next 2 to 3 weeks. We've got some PQ drilling to do in our high grade, medium grade, and low grade zones. Geomet is going to be really simple. It's more of confirming the answer than it is, coming up with a new question. But yeah, I guess we'll probably be through the program by about mid-August.
Okay, and I'm sorry if this is a ridiculous question, but where do you send your drill core in Zambia? I mean, is it?
It's only about 180 k's down the road. There's an ISO accredited laboratory called SGS Zambia in a little town outside of Kitwe called Kalalushi, which was the site of the old Chambishi copper mine. They've recently, in the last couple of weeks, moved to a much bigger facility in Kitwe. So they'll be able to improve our turnaround times, which have been not great. And they've had a few QA/QC fails as well, so they've had to rerun some samples. But by far, I've never managed a large-scale drill program where the laboratory was not a cause of delays. And sure enough, our biggest delay is getting our assays in yet again. But hopefully, we're looking at improvement over the next week or two, or up to 3 or 4 weeks as they get their new facility up and running. So we're hoping to see a big improvement in turnaround times on assays. Like Adrian said, we've got about a third of our holes in at the moment with, the kind of variable grades that you'd expect from a structurally hosted deposit, from spectacular down to 0. But yeah, that's basically the laboratory we use. And we have strict, rigid QA/QC protocols to keep the lab honest. From day one, I insisted that this program is run to code, National Instrument 43101, and we certainly stuck to that in terms of our submissions of blanks, duplicates, and standards. And it's really just a case of keeping close with the lab, keeping them honest, and keeping them giving us our results in a time frame which suits us rather than them.
And there's no issue. Presumably, you can drill year round where you are.
Year
You can
round.
operate
We've just drilled right through the rainy season. The rainy season is starting to decline now. It's definitely easing off. It's been a bit of a long rainy season. Usually it's done by end of February. We're still getting pretty heavy rain in the area. So I would say rainy season compared to dry season, we probably are running at about 5 to 7% on efficiency in terms of shift meters. But things are slowly starting to dry out in the area. It's definitely becoming a bit easier to access.
And I would say your plans, just very quickly, and then I'll let you go, Doug. I do beg your pardon. Your plans for the final quarter of this year and the beginning and next year, does that sort of depend on what you discover from this drill campaign, or do you sort of already know what you're going to be doing?
Oh no, I already know what I'm going to do. I mean, we need to get the assays in. That's key to the program at the moment. And we need to start putting real numbers to this project in terms of grade and tonnage. We know we've got pretty low strip. We know we've got an awful lot of tons. The big unknown for us right now is grade. And that's what we need to get to the labs and then get out to an independent resource, consultancy, the SRKs and the Snowdens of the world, and give us a concrete number that we can push into the market sometimes towards the end of the year. I mean, look, we know what we're dealing with. We know it's very large tons, huge tonnage. But the great unknown to us at the moment is going to be the final grade. It's a typical Lumwana model. You've got a lot of internal waste. You've got some very high grade intercepts. You've got medium. You've got low grade. There's dilution. We know it can be mined at that rate because Lumwana proves us, that it can. But we probably will get to those numbers sometime towards the end of the year. But definitely by the middle of August, I want to see this program done. I want to see it done. And then we can start talking about putting together grade tonnage numbers, which are real and matter, and going back and doing a bit of infill according to need.
Okay, thank you.
All right, Dominic. Thanks, Dominic. Doug, please go ahead.
Well, this isn't even a back of the envelope guess because I don't have an envelope and a pen in front of me. So I've just been bouncing these numbers around in my head. So it seems to me there's going to wind up to be a couple billion tons here and there. It'll wind up at 0.5%. And as Adrian pointed out earlier, it's all on the surface. You've got rail lines going east and west. You've got a bunch of other companies in the area playing around, interested in it. This isn't like some crazy low-grade deal high in the mountains in Chile. So what's it worth? I'm asking myself. And it seems to me 300 million shares out. I'm looking at $10 a share. And I'm speaking as somebody who's enthusiastic as a shareholder, but I see this as a 10-bagger from here. Excuse me if I'm way off, but those are the numbers spinning around in my head.
There's a huge, huge opportunity here, Doug, and I appreciate that. You've been a huge supporter from the very beginning on this. I remember the first time we chatted back before we did our 22-cent financing, and the reality is, Kevin has taken this now and turned it from a hypothetical and a target, a 20-kilometer long anomaly, into what looks like a 20-kilometer long deposit. Certainly 12 kilometers that seem to be hanging together. The multiples from here and the opportunity from here is huge. I mean, this is a very beginning, and we're trading at a lower level certainly than we should be. But now it's about showing the world how big it is, and as we go, there's a lot of upside from this point forward, and this is the most exciting part of the story. And just think about how much we've de-risked it at this point. We've gone in and drilled, I think, 166 holes, 34,000 meters, if I'm not mistaken, Kevin, 35,000, somewhere in there. That's a hell of a lot.
Just a touch over 34,000, and still drilling. We've got 4 rigs pounding. 5th rig is down, but should start up in the next couple of weeks. I mean, we're just generating enormous amounts of core. But the team's great. We've got a fantastic team on the ground. Really, really good guys. Yeah, I mean, we're going to make this happen. We're just going to make this happen. It's a good project.
That's how you de-risk a project, right? It's all about conviction. I know we've talked about this a lot just in our own private conversations, Doug and Matt. I mean, it's about conviction. It's about getting out there, having enough money to do the job. Going back to that earlier question about the amount of money we raised, why we decided to do that. It's so we're not sitting here poking away with 5,000 meters a year. This is about driving this thing to the finish line as quickly as humanly possible, but still maintaining an ultra methodical, concise drill program, which is exactly what Kevin's doing, to deliver a data set that's going to blow the majors out of the water.
Simple, straightforward story. No obvious, serious flaws that I can tell. It's got the size. It's a great story. You told it well in addition, Adrian.
Yeah, I really appreciate that, Doug. It's excellent.
Is the estimate, what would you estimate Lumwana, sorry, I cannot articulate words today, Lumwana sold for in 2011? It was part of a larger purchase, but what are you guys pegging that on? What price are you guys thinking was paid for that?
I mean, they paid 7.3, part of a larger purchase, and it included mine infrastructure. So, I mean, you got to strip that away. So you could probably take a couple $1 billion off the table right off the bat. I mean, still puts a valuation on it of $4 or $5 billion at $1.50 copper. That's the part that blows my mind. Like when we're talking about those numbers, copper was $1.50 or $1.80 a pound. Now you're looking at copper at 5+. I mean, it boggles the mind to think of what kind of value you could assess. And the real value for these things is, of course, it's always based on NPV, but it's all about how many people want it, right? At the end of the day, this is in the middle of the hottest camp on the planet right now for copper for the reasons that Doug just lined up. This is at surface, huge scale system. That's what the world's looking for. And I watched Robert Friedland present at BMO a couple weeks ago.
I was saying, if you watch Robert Friedland, then basically everybody's convinced that everyone has to buy it.
Just go look at what he has to say about copper demand and where it's going. I think the number he used at BMO was a 10 million ton contained copper deposit every year for the next 25 years in order to hit the numbers that would supply the deficit. I don't know how accurate that is, but I'm pretty sure that's the analogy he used. And Lumwana represents about 8.5 million tons of contained copper. So how many Lumwanas do you have to find? Well, there has not been another one in this camp for 10 years. Kevin's delivering the next big one right now. And this is the first time in 10 years that a new one has been unveiled. So, I mean, when you look at the market for that, the area, the region, the demand to be in this region, that's really what's going to drive the end valuation for this system if it can hit that critical number. And with groups like BHP, I mean, they need 1 billion tons for it to even be a consideration. They're not going to touch anything under 1 billion tons. And that goes for a few of the majors that are out there that could be in the sphere of potential suitors on a project like this. But to deliver a project, if you can get to that 1 billion ton magic number, and maybe it exceeds that by a vast margin, we have yet to find out. It certainly has the scale to get to an incredible size. We just need to drill it off and get it to that so we can talk about real numbers. And at that point, having all of those potential suitors surrounding you is what's really going to drive that end result. And
if Lumwana is the comp, it exceeds Doug's 10-bagger.
Yeah, I mean, Lumwana is the only comp. The only other one you can use is Tenke Fungurume. So Tenke Fungurume sits above us in the DRC. Today, it's about 122 million tons at 2% copper, so certainly higher grade. It's an incredible grade. Has a huge cobalt credit to it. But half of that was purchased a couple of years ago for about $4.5 billion. Half of it. And that's inside the DRC. The DRC comes with a massive discount. DRC is not Zambia. Zambia is a whole animal unto itself, and it is a hell of a lot better jurisdiction to be in. We own 100% of our assets. We don't have overhang and nationalization and risks and militants. I mean, this is a friendly, easy nation to work in. Kevin lives in Zambia. Kevin's been living in Zambia for, Kev, correct me if I'm wrong, 30 years or close to it?
Precisely 30 years.
There you go. It's almost like I've spent a few presentations with him over the last few years.
Yeah, it seems like it. Well, Adrian, this has been great. If there's anyone else who has any other questions to ask them before we let Adrian and Kevin get out of here. If not, then Adrian and Kevin, I'll say thank you very much. I appreciate the time. We'll get this published later this week. Awesome. And we'll talk to you soon.
Sounds great. Thanks so much, you guys. And thanks to all of you for joining today. It was great to be able to share the story again.
Awesome. Thank you.
Excellent. Thanks, guys.
Lovely to meet you all. I'm signing off till the next update.
Goodbye. Thanks, Kevin.
Excellent. Thanks.
All right, guys. Last time, people, because we didn't have the technical guy there at first, we scheduled a second call so we could get into it because it was all very hypothetical at that stage. Now we have a lot more information to deal with. What do you guys think?
Well, he's a great salesman. He's a great presenter. He's so articulate and he knows his story and he presents it really well. And the scale of this is huge. My concern is just the chart is in a downtrend and just the broader copper markets more generally. And there's just stock looks just a bit weak at the moment, but longer term, boff, could be huge.
Yeah, I agree with Dominic. I mean, they're cashed up. They got a great drill program. They got a huge deposit. They're in a great area with railroads and great neighbors, and their plan to get to by August is right on par, and they're primed for an M&A activity that's going to be quite large in a market macro backdrop that desperately needs what they have. I mean, it's just fantastic. But to Dominic's point, the chart, they've given back over 100 million since October in market cap, and they're pretty diluted per share right now. But maybe they reverse that.
There's quite a big warrant overhang as well.
Yeah, I like the chart, actually. I think this is one of those bargains that the market has kind of handed us. A second bite at the apple, as it were. I was looking through my emails. I first started talking to Adrian about this 3 years ago, and it's a quadruple since then. And I think we had this roundtable about a year ago, and it's about a double since then. So, if you go back a few months, those numbers would have been even more extreme. And I think it's a great opportunity. I agree with Doug. I think it's a multi-bagger from here. I don't know if I'd say 10-bagger, but I wouldn't be surprised by that either. If they prove it up, the grades are not extraordinary. They are structurally hosted and a bit intermittent here and there, but that's par for the course in that region. And the value that can be created by sheer size of these grades in that region is pretty obvious. So, yeah, I really like it.
There's a lot of material there for them to work with. The grade is certainly going to be the biggest concern. Can they, get enough material at that grade? But they've got enough material to work with. I think it's going to come down to the modeling, and it's probably going to be a long exercise to model this after they complete the drilling to optimize it for grade.
Yeah, good point.
Yeah, excuse me, I missed the study that they're doing by the end of the year, the model. Is that just like an internal model? It's not a PEA, is it?
He did not talk about a PEA.
A PEA by the end of the year?
No, he did not say PEA. He didn't mention PEA at all.
Sorry. Okay, sorry.
Yeah, they're just looking for a MRE.
Okay, gotcha. Okay. So the grade seems to me to be the biggest unknown and question mark about it.
Is there a point where does the grade have to get down to that this project doesn't work, that it's not appealing to the majors?
Yeah, I mean, I don't know. I mean, it also depends on size, of course, but yeah. That study will tell us a heck of a lot, won't it?
I'm just looking at the chart, and I'm with other guys. And Brian said that he was quite happy looking at the chart, and so am I. Actually, we took profits back in October, and the chart just proves that it was a good decision. But I think it looks like increasingly looks like a good buy right now. Just looking at the chart again and at the technicals.
And correct me if I'm wrong, but aren't they successfully mining 0.3% copper in the Western Hemisphere? And we're talking 0.5 or 0.6% here. So it's not the highest grade. I mean, because in the Congo they get 2-3%, but that's anomalous. But it's higher grade than most of the stuff we have in the Western Hemisphere. Am I right? I think I am.
There's lots of deposits that are being mined profitably at 0.3, 0.4, like you say. So the fact that they're shooting for 0.5 gives them an edge, and it's shallow, low stripping, and they've got enough scope there that they can define, within the overall body, areas with enough grade to make it worthwhile and get the size.
Anyone not like it?
No, I mean, I think it's okay. I mean, I'm not that concerned about the chart either, by the way. It's sort of back to where it was in September, and it does like a million $1,000,001 a day of turnover. So it's like not that bad. I mean, I've seen crazier adventures in Africa before. I think what's that?
I was just gonna say, I mean, everyone's talking about the chart, but we do have a major I mean, everything's looks like crap right now. We have
it doesn't look that bad considering
it's not uniquely problematic in the context.
It actually mirrors the copper chart if you look at it.
Yeah.
So I think it's a matter of like, I don't really want to touch the geology because it's sort of like, he did a good job of explaining it, but it's like fairly intricate. But yeah, I mean, if they execute and this goes, then I mean, I think it does build value. It's not like unusually large. It's also not like it really exploded. I mean, because it went up in September, I mean, that was a little crazy. Like it got a little ahead of itself. But I mean, it's not that crazy. It just seems like, a pretty reasonable junior play here that could go, and it avoids. Also, he's very professional. I mean, the thing is, like a lot of these guys just are not very serious. But I think these guys are like, they're either going to make it work or they're going to, run out of gas. I mean, it's like they're not running 4 different companies up there. I mean, they're like, they're doing it, I think, about as properly as you could do it. So, I mean, yeah, I mean, I think it's risky, inherent risk in playing around in Africa like this at the moment, but it seems like a pretty reasonable risk right now, considering everything they've done. They've done a lot. I mean, the fact that it's only doubled is kind of crazy, considering, what they've done. Pretty responsibly spent the money too. So anyway, the chart, I don't think the chart's that big of a deal. It's done a lot of like finding its footing for the last 6 months.
My takeaway from what he described of the drilling program is that it's very methodical. That's almost like a manufacturing scale of drilling program. It is designed to drill it up and put pounds in the ground. And if the metal is there, the metal's there, and we're going to see it. And if the metal's not there, they'll find that out too in a drill it to kill it kind of way. But I mean, I think they have a very methodical, systemic approach to what they're doing with a lot of confidence in what they think the geology is, and the drill bit will figure it out for them too. I think if they keep this program up, and if they don't run out of diesel fuel in the next 3-4 months or whatever, they're going to deliver. The deliverable will be a very solid program. So if you're okay with investing in Africa, which mostly I'm not, but this has me intrigued. Considering where they're at now, I mean, it's been a month of war, and this chart hasn't been nailed nearly as badly as quite a few others. So doesn't faze me at all at this stage. I kind of like what they're doing.
Okay. Any other opinions? Anything I want to add? It's cool to have our first company come back for a second time.
Was he the gentleman that presented the first time? I didn't see the first one.
He was, but the problem is that Kevin Bonnell was not part of that initial call. So we actually scheduled a second one because there was so much, the whole thing was so theoretical. And the geologists were like, this is not good enough for us. We need to talk to somebody who knows what he's talking about. And
he was really solid, really polished. I thought he did I mean, I don't remember if I didn't see the first one, but I thought he did an outstanding job, because he's trying to sell the story, and as an potential investor, I thought he did an excellent job of doing that.
Yeah, me too. I thought they were both really articulate, and they complemented each other well, and they both got high energy levels. They don't, there was no waffle there. They seem to get on with whatever they're saying. They get on with it, but they seem to get on with what they're doing as well. I was impressed with both of them.
I remember the first one, and it was okay, but I mean, I came away just sort of like, yeah, okay, another African copper wannabe, but now here they are a year later, and they've really improved the presentation, both the slideshow and the delivery, and they're showing the geology, they're showing rock samples and mineral specimens and stuff like that, and they know what we ought to see and want to see. and I think they did a nice job of putting their best foot forward in terms of where this project is. If the copper's there, it's there. They will find it with their drilling program, or if it's not there, they won't find it. But if it's there, they're going to find it. And so there's a lot of upside just on the pure looking ahead, drilling program.
I'm interested to ask the panel more generally. I mean, are we all bullish on copper more generally? I think I am.
Yeah.
Well, maybe I listened to too much Robert Friedland. So.
Well, Robert's right. Just because he's Robert doesn't mean he's wrong. He's right. Very bullish over the long term.
Yeah.
Is Mickey still on the call? I was wondering if he has a take.
No, Mickey abandoned us at some point.
Oh, okay.
He was here, but he left.
Shame.
Unfortunately, he'd give us the counterpoint, I'm sure. Anyway, well, this has been great, guys. Thank you again. Once again, it's always great to see you guys, and I very much appreciate your contribution to all this. So thank you. Thank you very much.
Thank you for organizing it, Matt.
Thanks, guys. Thanks,
Matt.
Thanks,
Thanks, everyone.
All right, guys.
Thank you very much.
Take care.
All good. Thanks.